Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the we're going to take a look at the technology sector. Okay, we're going to look at stocks in the technology sector. We're going to look at, and I'm going to show you here how there's bearish reversal patterns have formed all the way across many of these tech stocks. And so you need to be a lookout next week for a potential pullback. So yeah, there was a monster run, and then now they're hitting some resistance. And so if you look here at TECL, this is the Drixon Daily Technology Bull 3 times. And yeah, this does trade options. And so it had been a big money maker on the way up here. You can see it bottomed out down here off of the 200-day simple moving average at 96, 95, and ran all the way up here, hitting a high of 130. So, call options returned, huge percentage gains on this move. And now it's trying to hold the middle Bollinger Band currently at 125.41. Today, on Friday, a bearish reversal pattern formed, bearish Harami cross. Okay, and so this is a strong reversal pattern, especially with the doji forming at the top of the run. And so if it drops below 125.41, that's going to signal that this it's hit a temporary top, and you could see it drop down and test this 50-day simple moving average at 121.42. That's the downside risk. It needs to hold that level. If it can turn that 125 level into support, then a new uptrend could begin. So fail to hold 125, then 121's on deck. Hold 125, and then 130 will be the key level to break, and a possible new uptrend would start. Now with TECL, the 3 times bull ETF, technology bull under pressure. Now I'm going to show you how all these stocks in the sector are forming bearish reversal patterns as well, or they've already confirmed reversal patterns. If you look here at Amazon, AMZN, you can see here it formed a bearish formed the bearish hanging man on Thursday. That was this candle right here. So following multiple white candles, this hammer formed at the top after a gap up open was signaling potential downside risk. There is a small upper wick, so that can be contested by some people, but we're calling this a hammer. And the red candle that formed on Friday did confirm that reversal pattern. And so now we're going to see if EMA4 support's going to hold. That's the big level. It's currently at 1439. Now, if that breaks, you could see a drop down to 1424. As long as the middle Bollinger Band all the way down at 1402, that dotted purple line is holding, this uptrend still intact. It's just it's hitting temporary resistance here, and it could pull back to test that middle Bollinger Band support level. It needs to break that 1460 zone, and then it had gotten above the high close, which was this closing price on this candle right here on the 31st, and so notice how it closed right back at that level. So you're getting a double top back at this resistance level from January, and so it has to bust above 1460. Otherwise, if this is a double top, it's going to go back down and test that 1400 level. The bearish reversal pattern confirmation is a red flag. Okay, look at Apple here, AAPL. Okay, so it did form a bullish reversal pattern as well on Friday. As you can see here, it had that really awesome run off of the low down here. You can see the lower wick. There was heavy loading, and then you had the multiple white candles in a row, and then that was followed with this red candle on Friday. And so you have bearish Harami cross reversal pattern. This could be debated as well whether or not this is a doji. It's close to a doji. They're calling this a Harami cross. The bottom line is this is signaling a potential pause in the uptrend, and so it could pull back now and test that 50-day simple moving average at 170. That's the big level to hold. If it stays above 170, that would be really bullish, and then you'd be looking for a run back up here to the recent high close, which is this above 178 here. And if it fails to break above 173, that's the big level to break. You could see it drop down, test that 50-day simple moving average, and then if 170 support breaks, you could see a drop down here to test the 50-day simple moving average or the 100-day simple simple moving average at 166 and that middle Bollinger Band at 166. It needs to hold those two levels to keep the uptrend going. Notice there is a gap between these two candles. So a pullback, they could fill that gap. If you look here at Netflix, so Netflix is another stock that is starting to cool down. It formed the bearish Harami cross reversal pattern as well. You could see here a doji formed on Friday. So it had 4 white candles in a row, and then it formed this doji right here on this candlestick. That's where the close is open. The close is at the same level as the open, and so it just signals that there's a real battle between the bulls and the bears, and it signals indecision on the chart. And so following a multi-day run, this isn't what you want to see if you're a bull, because it signals that the run could be cooling down. Notice how it failed to get to the previous high. The high close here is the big level to break on the 29th. You want to see a close above that level to head higher. If it fails to break that level, this could be forming a double top, and if it double tops out, it could pull back. So it has to break that 280, the high close on Thursday, and then you have that 285 zone here that needs to break, and that would signal it wants to head higher. So 280, 285. If it fails to break those two levels, it could drop back down and test that middle Bollinger Band at 263.74. Notice how that level was holding, on the pullback, and so it has to continue holding that level on the way up. Otherwise, if it drops below, that's when you could see a big drop down to that lower Bollinger Band. So this is a crucial level. We'll be looking for possible bullish reversal confirmation with this bullish Harami cross reversal pattern. Keep in mind, anytime a doji forms, or a hammer during an uptrend, many times it signals the run is cooling down. Okay, look at Google here. So Google has formed a bearish reversal pattern as well. And so, yeah, unless you're, good at reading the charts, you might have missed this one, but there's a gap between these two candles right here, a very small gap, and then another gap here in between these channels, between the high of day and then this was the close, and then the open was way up here, and so it created a space between these two candles, and there was another one there. So there's 3 gaps in a row, and so what that forms is bearish 3 gap ups reversal pattern, and so a reversal pattern has formed as well for Google. Notice that it's hitting that 50-day simple moving average resistance level. That's that green line right there, and notice the long upper wick on Friday's candle. There was a lot of profit taking off this 110 resistance zone. It didn't quite hit 110, but this resistance zone, it pulled back, and notice how they didn't let it close above that 50-day simple moving average. The computer algorithms were saying, we're not going to let it get past that level. It's the sell level, and so they drove it all the way down, and so it has to get above 1097. If you see it fail to break that level, it could pull back. So it's all about getting above 1097. If it breaks that, then you're looking at 1117 is the big level to break. Once it gets above that middle Bollinger Band, a new uptrend can begin. If the 50-day simple moving average turns in resistance, it could drop back down and test that 1050 zone where the 100-day simple moving average is at. There is a bullish crossover here on EMA 4 crossing over EMA 8, the pink line over the lime line, and there was a close again above EMA 13. The chart's been trying to reverse. It's just all about breaking 50-day simple moving average, that green line. Fail to break it, and it's going to signal a temporary top. Keep in mind, Google is in a downtrend right now, so it's forming candles below the lower Bollinger Band. It just retraced. It just had a short cover rally. It has to get above the middle Bollinger Band and turn that into support to get a new uptrend going. Okay, let's look at Microsoft here. Okay, so Microsoft got back above the middle Bollinger Band last week. It had an epic multi-day run. You can see the 4-day run. It had hit all the way down here on the 9th, bouncing off of that 100-day simple moving average support zone, and then it got back above that day, that 50-day simple moving average. Notice how it was holding that green line, and then it ran all the way back up. On Wednesday, it closed back above the dotted purple line, so it got back above the middle Bollinger Band, and so it's trying to get a new uptrend going here. It has to hold 90.94. That's the middle Bollinger Band, and then you want to see it stay above EMA 4 91.27. On Friday, bearish Harami reversal pattern formed. So Microsoft formed a bearish reversal pattern as well, and so You know, we'll be looking for bearish reversal confirmation on all these charts that formed reversal patterns, and then you know, and so if it can hold that middle Bollinger Band, it could continue heading higher, but you know, it has to get above the high close here, and so you're looking at the closing price on Thursday as the big level to break, and then the high close up here at 94.50. Those are the two big you know, levels. So keep an eye on it. It could pull back if it gets back below the middle Bollinger Band or any of these other stocks that you know, you know, if once it's above the middle Bollinger Band, it needs to stay above, and if it drops back below, that's a major red flag that the chart is not ready to go. If you look at Facebook here, it's down 1.4% on Friday, and so this has already has a bearish pattern going. You know, it did form a hammer here on Thursday. It didn't have a bullish reversal confirmation yet. So basically, the you know, a red candle formed on Friday. So you had two bearish candles in a row. You know, you had the hammer here that was a red flag, and so whenever, you know, this was a white candle followed by a hammer during, you know, with a gap up open, always be you know, if you're long, very you know, it's a risk to hold overnight, because you know, there could be a pullback, and even, you know, down here below the middle Bollinger Band, it's still in a downtrend. There's still signal downside risk, and you had the gap down open, and then the low close there back below the 100-day simple moving average and below EMA 4. This chart's totally busted. So Facebook looks like total, I mean, it looks like it looks really bad. So this does not look good for Facebook right now. Okay, so it's back below EMA's 4 and 8, below the 100-day simple moving average. The bears are in control. This is where you want to be short, and it could drop back down to 169. Yeah, so not looking good for Facebook here, for the Facebook bulls, but the bears are looking like they're back in control. And so yeah, if it gets back above, though, that 179, 180 level, it could head higher. It has to get above EMA's 4 and 8, the 100-day simple moving average, EMA 13, the 50-day simple moving average, and then get back above the middle Bollinger Band at 183 to get an uptrend going. Facebook has a lot of work to do. This is a major resistance zone, and right now the bulls are losing the battle to the bears. So this might have a retest of 169. Okay, let's look at Intel. Intel right here, you know, cooling down as well. All right, so keep an eye on Intel. You know, Intel has got the you know, had did this have the bullish doji star? I think I have this on the wrong one here, but you know, because this does not look like a doji to me. But the bottom line is we have a red candle here that formed on Friday, and as you can see here, it's all about this purple line here, this dotted purple line. So it's 45.87. We'll just call it 46. If it could stay above 46, you know, that 45.87 level, that's going to signal that a new uptrend is starting, and if that level turns into resistance, then it could pull back, and you could see that 45 level tested on the 50-day simple moving average. And so for the bulls, if you get a close back below that 50-day simple moving average, that's going to be a major red flag. That would put it back below EMA's 4 and 8, and that makes it a risk to hold long, and you could see a drop down to 43. That would be where you'd want to load up on puts, or that would be where, you know, downside risk, there'd be downside risk. Maybe the puts would return some nice percentage gains, and then if it breaks back above that middle Bollinger Band, you know, that would put the calls in play for potential upside, possible new uptrend. So this is right at a key level here. It's like either you know, break below 45, and you're going to see a drop down into the 43s, break above 46, and it could really get moving and get a new uptrend going. With the whole sector under pressure, it could be difficult. Let's look at BIDU here, and this could just be a pause in the uptrend. And so that very well may be the case here for all these charts that I'm showing you. You know, all these bearish patterns had formed, and BIDU is another one, BIDU. You know, it came up here and it formed the bearish Harami reversal pattern, and so you have the red candle inside the previous white candle, and so this is also signaling the chart could cool down. I mean, it did form this bearish doji star here, and it pushed higher. Okay, so this is just another signal that could cool down. It needs to hold that 100-day simple moving average and the 50-day simple moving average. It basically needs needs to stay above 239, okay, and then it would be best if it could stay above 244 and hold that 100-day simple moving average. If it does, then a new uptrend could begin. If it pulls back below those levels, that would be a signal it's not ready to go. And so what I mean by a pause in the uptrend, all these stocks had formed, multiple white candles in a row, and then they finally formed a red candle. It could just be, just a one-day event. Notice that it was very light volume. That's just signaling, a possible pause in the uptrend. You have all the big volume on the up days, and then a smaller volume bar on the down day. Let's see if that's the pattern for all these that form the red candle. Those are all kind of average. You start getting more concerned if you're seeing a big volume spike on the red day. Notice how the red day is smaller than the green days, so that's better for the bulls when you see that. But still here with BIDU, it has to hold that middle Bollinger Band. It needs to stay above 239 to keep that uptrend going. Then if it could break above 278, get above 250, that's when it could head back higher. And then if you're a bull, you want to see it get above 260. That's the high close level to break. All right, and now let's look at NVDA here. Now it didn't form a bearish reversal pattern, but it did form a red candle. And if you notice here, it came up and it's formed, what looks like a possible double top. You've got the high close here on the 29th, and then it came up and it retested that level and it failed to break last week. So after this big, it started an uptrend down here on the 26th of December, and it ran all the way up to this 247.50 level for the high close on the 29th. It pulled all the way back down and hit that 100-day simple moving average again. It tested this level from December, and it ran all the way back up to 247.50 again, to the same resistance level, which it failed to break, and it's forming a red candle. And so it's either going to double top here, and if it does, then you're looking for a drop back down to 235, testing that middle Bollinger Band, or if it can close above the closing price on the 29th, that's going to be your signal that it's ready to head higher. Above 247.50 will signal, okay, NVDA is still strong and it's breaking out to new highs, and you can really see a big push higher. So many times when you get a stock that's hitting an all-time high close like this, once it busts through, it really gets a nice push. Now, the inverse of that is if it fails to break, you could get people locking in gains and it could pull back. Now, if 235 breaks, that would be a big red flag after forming a double top, and you could see a drop all the way back down to test that 50-day simple moving average. So it's crucial that 235 holds and that it breaks back above 247.50. A closer support level to keep an eye on will be 241. If you see 241 break, that's going to be a major red flag. That's EMA4. It has to hold that level to push higher. Okay, so now since I showed you earlier TECL, the technology bull, was cooling down with this bearish Harami cross reversal pattern with that very strong doji. Something to keep an eye on next week for the option traders is TECS. Okay, the Drixon Daily Technology bear 3 times. Okay, and so you could look to possibly trade this with some calls, and if it reverses, just something to keep an eye on. This could heat up if the other sector breaks. If all these stocks break down and they start reversing, this could potentially head higher. It did form the bullish homing pigeon reversal pattern on Friday, so the short technology trade is heating up. So we'll be looking for bullish reversal confirmation. Notice it also formed a hammer at the bottom. So you have multiple red candles with a bullish reversal pattern and a hammer formed at the bottom. Many times that signals a bounce. Notice the lower wick. Bounce players were loading. The first target is the EMA4 at 592. Okay, so the candles drop below that level on the 12th and making it a risk to hold to be long. Once it gets back above that EMA4 and it turns that level to support, then the short trade will be back on, shorting technology. If it stays below that middle Bollinger Band at $6, that's going to be a signal that the bears are still in control and that TECS still has downside risk. It has to get back above the middle Bollinger Band, similar to how it did on this candle right here, how it closed above that dotted purple line after being below an extended period of time, and that led to that huge run all the way up here. And so you're looking for that again, back above the middle Bollinger Band, and that could lead to a run up to that 50-day simple moving average and then possibly up to that 100. Fail to get above 6 will be a red flag. First off, it has to get above the EMA 4 at 592. Okay, so keep an eye on these stocks this week. We'll keep an eye on the technology sector. I'll post update videos, and yeah, we'll see if these bearish reversal patterns are confirmed for the technology stocks, and we'll see if the we'll check it out and see if TECS heats up. Okay, thank you for viewing this video. If you'd like to learn more about charts and technical analysis, and yeah, for us, all these stocks are for option trades. So what you'd be looking at for is trading puts next week. If the technology stocks all start getting under big pressure and start pulling back, then you're looking at potential profits on puts. Okay, that's what the charts are telling you here. Okay, thank you very much for viewing this video. Check us out at our YouTube video, or check us out at our chat. I'll post the link below the YouTube video. Thank you.